We're back with another edition of the Live Wire. And if you remember in the voltage meter, we whipsawed last episode all the way from negative to positive and then back to neutral. Right now, we're still in that neutral ground. There's a lot of volatility and there's so many different factors that come into play during this time of the year and during this period in an election cycle. But to see what we've been doing in the portfolios, let's take it over to Brian for some current activity.
It's time for another segment, Current Activity, and we're here. It's Jake and Brian. I mean, wait a minute. It's not Jake. Glad to have Steve back.
I'm back. A little traveling, old age getting to me, I'm on the mend. Everything's good.
Steve 2.0. But let's take a look at some current activity and what we've been doing and what we've been seeing.
Well, thanks, Brian. If you followed along this entire year, actually going back into last year, we were talking about a change, market dynamics, presidential election, a lot of that happening. It's finally actually occurred. And so when you look back to what we were saying, people were really focused on the high flyers. We're going to show you a few charts here next to say, here's what we have seen, here's what's actually happening now in the current activity, and also what we think will happen next. So if you take a look at this first chart that's up there, you can notice that across the top, we have small caps in the green, we have the Dow in the yellow. Both are holding up much better than the two below it. The NASDAQ and the S&P 500 have demonstrated some signs of decline. But when you go to the lower chart, that's bonds, and the bonds have been holding up as well. So strictly what we've been talking about, that there's a change in what investors are seeking, especially over the summer months and ahead of the election. So let's look at the next chart. As you can see in this next one, we actually put up a bunch of different types of individual stock holdings. Across the top are the ones that have been performing, the likes of Best Buy, L3, M&T Bank, State Street, and the ones that have not. Bloomin', which is basically Outback Steakhouse, Cliffs, Cleveland Cliffs, you have Edwards, and you have Lululemon. So the point there is we've held these and we have some good ones, we have some bad ones. You take the good with the bad, but you want to cut the losses. And what we've done there is you could see the bottom two, Ford and Invitation Homes, were stocks we held but had dropped fairly substantially after earnings, but we sold ahead of time. So the key is we've been trying to focus on the winners and trying to cut short the losers. But from the actual perspective of the sectors out there, you could see it very clearly in this chart where technology has really been underperforming, but you can see utilities has been performing well. And to break that down, there's a stock that we kind of follow, we don't own, Super Microconductor. It's been on the way down, and a company that you might know locally, utility company PPL, has been on the way up. So the bottom line is this, and this is the summary of it all. When you look at what clients have actually been excited about the last few months and what a lot of them have called in about, everybody's talking about NVIDIA, and we've been doing our best to sway people from buying that at this level. It's been on its way down, and something that actually reported earnings today, you could see in this chart, is 3M. It's done substantially well, including the move it had today. So Brian, the theme there is this. You have to have patience as an investor, and you have to look beyond what the media is saying. We've been doing that. We've been getting some good holdings. We've had some losers, but overall, we're staying steady.
Yeah, you heard it here. Glad to have Steve back. Now let's take a look at Short Circuit. It's time for the Short Circuit, and there's always a why behind everything. So in this case, we looked at some of the current activity of the rotation from some of these high-flying names into some of the more boring names, so to speak. Well, why is that? I think there's several factors at play here, not just one. But you look at investors' appetites, they may be changing. Sometimes the market gets ahead of itself, and certain things go out of favor, certain things come into favor. It's like this, the market needs a breather. Sometimes your car runs out of gas, hopefully not. But if it does, you have to find something else that's going to get you where you're going. The other thing at play is it's earnings season. Anytime companies are reporting earnings, that can lead to some volatility, wild swings up or down. And I think you're seeing that in the markets now. But the theme is still volatility. while we've seen a nice run up since the end of last week, we could still see some volatility ahead. The election is still unclear. Another wrench was thrown into it with the announcement of a new Democratic nominee. And so now investors are more unclear as to what's going to happen. And we think that until the election happens, until there's clarity, we're still going to see that volatility. Hang in there. We're on top of it. We have a plan. Stay in touch with Econ Wealth through our live wire.